All right, there we go. There we go. Gosh, welcome. Coffee with Marcus and Mark, but just Mark today, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we are trading them. Today is Wednesday, August 14th. CPI data out. We'll take a look at that and just how it's moving the market. Plus, will we get a half point rate cut in September? We'll look at Fed funds futures and the probabilities there. Apple on a potential 6-day win streak. And is the government going to break up Alphabet? And then there's everybody all hopped up on Starbucks. We're going to take a look at Starbucks plus another WTF winner. We'll look at our open trades. As you can see, there's a lot to talk about. So let's go ahead and get started. My name is Mark Hodge. I'm head coach of Rockwell Trading. And let's take a look at the charts. Get right over here. And here we have the S&P 500. A real nice day yesterday. The S&P 500 finishing higher and up 1.7% after that PPI data that came out better than expected in the morning there. The Dow Jones Industrial Average also higher, up just over 1%. The NASDAQ leading the way, up 2.4% yesterday. So big moves, eliminating that drop that we saw last week where there was that panic and uncertainty and indecision and freak out in the market. Now we're back to trading where we were just a week ago or 2 weeks ago. And let's see what's going on today. So this morning we had CPI data. Mentioned before that typically the CPI report is a little more significant when it comes to comparing PPI versus CPI. This morning, an hour before U.S. markets opened up, we had this report here. And if we look at the E-mini S&P, just flatlining, and this is just a perfect example of what markets look like when traders are waiting for news. So nothing going on in the Asian session, nothing going on in the European session, just an absolute flat line. And then you get this little back and forth trying to figure out what to make of this report. We spiked higher, we dropped, we rallied back, and it looks like traders just having a hard time trying to figure out what CPI data, what it meant for the market. How does that translate into opportunity? Is there more uncertainty? Is it a positive? Is it a negative? Does it mean the Fed's going to cut half point in September? Is there going to be a quarter point? What does this all mean? And let's take a look at the CPI report here. Oops, let's go to calendars and let's go to the economic calendar. Need to go back a week. Here we go. Here we go. So core CPI coming in line with expectations. So core CPI, an increase of 0.2%. This was expected. CPI, an increase of 2.2%. This was expected. Year over year, there was a little drop. So tick lower year over year. This means that on an annual basis here, CPI prices increased for consumers 2.9%. The Fed's target is 2%, so this is a tick lower than the 3% year over year that we had with the last reading, and it's definitely a positive. But it also is just in line with expectations, and we already had that run up. We already had that rally after the PPI data that was released yesterday, and this coming in much better than expected. So to me, it's no real surprise that there really wasn't a whole lot of follow through, even though this is a good report because it's in line with expectations and consumer prices are not increasing. There wasn't that shock. It also didn't change things a whole lot, especially after yesterday's rally. And let's go ahead and let's take a look at CME Fed Funds Futures and see what's going on with the probabilities. We see that a quarter point hike, 56.5% probability, a half point hike at 43.5%. So there's 100% probability right now based on Fed funds futures that the Fed is going to cut in September, but it's now leaning more towards a quarter point rather than a half point. This would be my expectation. I do believe that the Fed's going to cut in September. I do believe it's a quarter point, but of course, there's more data to consider. So we'll see. The meeting is wrapping up on September 18th. It's always a 2-day policy meeting, wrapping up on Wednesday. And that September 18th announcement, that could be big for the markets. But right now, it's also pretty much expected that a quarter point cut will take place. So if that doesn't happen, that would be a huge shock. 50 basis point, that would be a bit of a surprise too, at least based on the probabilities. And who knows? Fed Chair Jerome Powell, he is going to be in Jackson Hole, Wyoming for that annual symposium next week. Maybe he gives the markets a little nugget and starts talking cuts at September rather than let's focus on the data. Let's focus on the data. Maybe he gives the markets a bone and says, you know what? I think we're ready. We'll have to see. So with that said, let's look at what's moving the markets. And let's actually go back to PowerX Optimizer, look at the heat map here. And we see that there is a decent amount of green, but it's not a broad market rally right now. There is some back and forth going on as traders try to digest that CPI data, what comes next. We see that Tesla and Google standing out like sore thumbs here. Google down 3.5%, Tesla down 3.3%, NVIDIA up 0.6%, Microsoft up a quarter of a percent, Apple up almost a half of a percent. So with the Magnificent Seven, it's a little bit mixed, but definitely taking some losses here in Google and Tesla. Let's look at Apple since we brought it up. Apple, look at this comeback since last week. And we see here that 1, 2, 3, 4, 5 winning days in a row. Working on number 6 right now, trading at session highs. If this holds, this will be the best win streak since July when you had 7 winning days in July. And we'll see if this win streak continues. But a nice follow through, making up for all of that drop that we saw going into Monday's session last week. So Apple on a nice run. We could take a look at NVIDIA. NVIDIA, another one, really making a nice move since last Monday. And here we see starting the session higher, pulling back a little bit, but still positive for the day. Let's take a look at Google, though, or Alphabet, and taking a bit of a hit here, opening lower, now down 3.6%. This comes after a report, a Bloomberg News report, saying that U.S. regulators are considering a breakup of the tech giant. And the report takes some people who are knowledgeable of the discussion and saying it would most likely be focused on Google's Chrome browser and the Android operating system if the Department of Justice pushes for a breakup. Pardon me. So investors early on, now let me have a little sip here. There we go. Whoa. Ooh, what's in this coffee? There we go. That's a little bit better. So a little bit of a drop at the open today, but some follow through, some downside here. This was actually a WTF trade. Nice winner here. We are out of this one, so no longer in this trade. But investors not liking that report, and we'll see what happens there, if it's a much ado about nothing or if the Justice Department does decide to go after Alphabet and considers breaking up Alphabet. We'll have to see. Let's see. Starbucks. We have to look at Starbucks again. I mean, it looks like investors just absolutely loving the announcement that Chipotle's CEO will take the helm. And yesterday, after a huge gap higher, even more follow through. Starbucks finishing higher yesterday by 24.5%. I mean, this is just a monster rally there. Looks like some profit taking today, down 4%, kind of getting back towards yesterday's open. But just a huge move higher. Since we're looking at the wheel analyzer here, it does look like you have some premium at the 87 strike because of that volatility, maybe some uncertainty exactly where we go right now. But that's pretty impressive, 5% below the the current price of Starbucks. Might as well look at Chipotle, see how Chipotle is faring after the news. Yesterday, investors in Chipotle a little bit concerned about the announcement, liking that CEO and not liking the idea that Chipotle CEO is leaving, finishing lower by 7.5%. This morning looked like there was a little follow through to the upside, and then because we reversed off of these lows. But today down 0.6%. Not a major move with Chipotle today, but definitely showing that the CEO will be missed. So let's take a look at what's going on with open trades. And let's go over to the WTF analyzer here. No new signals, but we did have some exits. Met was a trade that I took and a nice winner here. Going long around 68.91 this morning at the open, closing at 70.40. That was actually my fill right at the open. Getting out of this one for another nice winner. So couple weeks ago, there were a couple of losses when we had that semiconductor pullback and a couple of semis popping up on the list. But real nice follow through with those entries that we had on Monday and met another winner. Now, Citigroup was a trade that I did not take, but this is up nicely and also a profitable exit. So an entry at 54.08 and the exit this morning would have been 58.37. For a nice $4 gain there in a couple of days. Morgan Stanley, another nice winner. Morgan Stanley, an entry at 92.65 this morning, an exit at 97.76, almost a $5 gain there for a couple of days. I actually had some more follow through to this one, but an entry according to plan, or exit according to plan, that is, 97.76 at today's open. USB, another winner, entry at 41.13 and an exit at 42.44. So nice little percent gain there, but not as much of a dramatic move that we saw with some of those other names. An exit and all of these closing profitably. Now we could look at open trades here because I am in a few still. I'm in Capital One, and we got filled at around 131.94. Right now, this is trading about $2.50 higher. No exit yet, so waiting for an exit signal. EMR, now this is one where I was filled at 106.82, but also picked up some shares at 101.48, and right now trading at 102.81. So about a scratch right now, waiting for an exit on this one. And nothing to do with it right now. Honeywell just pulling back a little bit. So this is another one still open and nothing to do with this one. Still waiting for an exit. Capital One looking great. EMR, no real problem there, waiting for an exit. Honeywell not working out as expected, but that's okay. We'll see what happens with this one and see if there's some traction and some buying here that pushes this one higher. Pfizer is a position that I'm currently not in, but Pfizer entry signal at 28.65, up just a little bit, trading around 28.82. We also have Wells Fargo, a trade that I did not take, but an entry at 51.30 right now, trading around $53. So those two are up and waiting for some exit signals. So that's what's going on with the win the fear strategy. We could take a look at the wheel here and wheel BP. Let's go ahead and go to a daily chart here. BP, I'm still looking to try and sell calls at 34.50 and not possible yet. Trying to get that 30% annualized that we're after. Pulling back just a little bit this morning. It looked like we might have some nice premium there going out a week, but right now, down just a tiny bit. Let's see what's going on with crude oil. See, crude oil is down 1.3%, 1.4%. And that's actually what we saw yesterday and then also today. Some oil and gas plays popping up on the wheel scanner. If you don't have an oil and gas position, it might be something to consider. After this nice rally here in crude oil getting up towards $80, crude oil pulling back and presenting us with some oil and gas plays. So no surprise there that I can't sell calls yet, but within striking distance, we're not too far away. Now, taking a look at CSIQ, CSIQ just had a blockbuster day yesterday, up 10%. I'll take that, but then today down a little more than 2%. Let's but you're headed the wrong way today, CSIQ. We need to pop back up towards this upper range takeoff. That's what we're looking for. Hoping that a dip in yields and interest rates and yields coming down a little bit could propel this one higher. And right now, not the case today, but yesterday, nice day. I can't complain. Halliburton, another position that I'm in. And right now, waiting to sell calls, just like BP. The correlation to these two, not as correlated as you might think. That's why I decided to trade both, but waiting to sell calls. Coles, yesterday, a positive day, a little more follow through and upside today. This is not one I'm in, but Marcus is in this one. Merck is a trade that Marcus is in. I am not in this one. And then there's good old UPS trying to figure out what to do after this earnings drop that we had back in July. So it looks like we have this new range that's been established. Traders trying to figure out based on this earnings report and weaker than expected revenue and lower EPS than expected, trying to figure out where we go from here. As mentioned, this is a nice dividend payer, or at least it's decent. And getting $1.63 when you're waiting to sell calls, that works for me. So these are the open wheel trades, and looking to pick one up here, but didn't see anything that stood out as an absolute A+ trade. The one that caught my attention, though, we could take a look at it. Nucor. We see here that Nucor is down over 2% today, and the 136 strike for Friday's available, and 136 for next Friday as well, given more than 30% annualized right now. The 136, even though Nucor has pulled away from these highs that we had back in March of this year, we have this nice support zone, and we could even drop this a little bit lower. It looks like we have some nice support around 131 to 140 in here, and so that 136 is decent. It's on my radar, but not pulling the trigger yet. If we look at the asset correlation tool, we see with the positions that I'm in, it's actually very uncorrelated, which is a nice thing. The little bit of correlation between BP and Halliburton, but mentioning that not as strong as you might think. Oxy is another one that with this pullback in oil and gas has popped up and is something that some traders might consider. Halliburton, though, highly correlated to Oxy at a 0.7 correlation. So this is where I don't want to get too heavy in oil and gas and have the portfolio really the success or the profits or weight on the portfolio if you have some down days all tied to what's going on with oil and gas. So Oxy isn't for me, but definitely something to consider, and Nucor on my radar. So now's the time when we either make you laugh or we make you cry or we make you sigh. That's actually probably, it's either a sigh or a laugh, not necessarily a cry, unless you're just really hurt by these dad jokes. Marcus might be here tomorrow. I believe he's going to be here Friday for sure. So if you're done with my dad jokes, Marcus's dad jokes are coming. Well, today I'm going to have to ask, what do you get when you cross a parrot and a caterpillar? a little walkie-talkie. Hope that made you chuckle, maybe sigh. Hope it didn't make you cry. Either way, if you like the video, give it a like. Don't judge us on the jokes. But if you like the content, you like the review of what's going on in the market, and the review of some trading strategies that we trade here at Rockwell Trading, then please give the video a thumbs up. If you're new to the channel, please subscribe or share this with someone who you think can benefit from these daily updates. That's going to do it for today's session and video. And until tomorrow, happy trading, everybody.